Okay, what we're going to talk about is tax reform and why it's so valuable to young people in America. Because there's three keys to tax reform. There's one is corporate tax rate. That was reduced. Top rate was reduced from 35 to 21%. Two, individual changes. Of which there were many, and I'm not going to go into those at all today. Because what I'm going to talk about today, a little bit about is one, but mostly about three. And that's the repatriation overseas foreign earnings of American corporations. This is, in my estimation, the most important element of tax reform. And here's why. 30 years ago, Dan Rostakowski was in charge of the House Ways and Means Committee. One of the things that they did in the, after the Tax Equity and Fiscal Responsibility Act of 1986, companies started moving operations overseas because they didn't have to pay health insurance. Here's the reasons for moving companies overseas. Don't have to pay health insurance as high as it is here. Lower property taxes. Don't have to match, no matching of Social Security. Workman's comp, unemployment insurance are much lower. And mostly, the tax rates of businesses, corporate income tax rates, are lower. Now I'm talking about in foreign countries. But what happened was this. If you made money in a foreign country, let's say you're GE and you decided to make parts overseas, the company that your subsidiary was overseas would make money. They would make actually more money because the final thing was lower pay scales. They would make a lot of money, and instead of paying 35% tax, they would pay whatever that corporate rate tax was in that foreign country. But when they made that money, they had to do something with it. So what they did is they kept it in foreign banks. So money was kept, overseas earnings was kept in foreign banks. Now, why wouldn't you just bring the money back here to the United States? It's a big question. Because there was a 35% repatriation tax. That's huge. That's a huge number. So, when they first built this tax, they didn't think the number would get that big because they thought that was a reason to motivate companies to build in the United States. Well, because of these reasons, more and more companies took their production overseas, and over a 30-year period, all we watched was companies leaving the United States. Under the Trump Tax Act, I think the most important element of the Tax Act, while this was important, this was important, the most important element was they changed this 35% tax rate to 15%. Now, why is that important? Because it's, by all estimations, there's almost $3 trillion of foreign source profits sitting overseas. By changing that tax rate from 35% to 15%, if companies want, they can bring that money back here. I'm going to give you an example of Apple Computer. Apple Computer is bringing back $350 billion. The tax they're going to pay on that $350 billion is 15, 30, 45, and 7.5. They're going to pay $52.5 billion in tax. What they would have paid before was 35, 70, 105, and 17 is 122. That's new, and that's old. So what was the motivation to Apple Computer? They got to bring $350 billion back into the most stabilized economy in the world instead of keeping it overseas. And to do it, they got to save $70 billion in taxes. Now, that's a pretty big deal. So if you think about what I'm saying here, the total repatriation as of this month, and it's going to be an approximation, is $1.5 trillion has been repatriated. The tax savings on that 1.5 trillion is 300 billion in tax savings. Now, the liberal media will have you believe that all that 300 billion, the reason they brought that money back is so corporate CEOs can make more money by buying back their own stock. But what happens when you buy back your own stock is the stock value goes up, and anybody that has 401ks can tell you as their 401k has gone up dramatically in the last 18 months, really so in the last 6 to 8 months, the rebuyback of that stock has helped them out. So 300 billion in tax savings has been huge, but more importantly is this. If you want to borrow money and you're a big corporation, or you want to build a new plant, you need to have the funds to do it. By bringing back this money, now you don't want to put this money in the First National Bank of wherever for 1 or 2%. What you want to do is you want to reinvest that money and try to make better than 1 or 2% return on it. So what you're going to do with that money, since you're repatriating it, is reinvest it in your own your own company. If you buy back your own stock, you still got the money in your company. So you're going to take that money and you're going to do something with it. That's where it gets really interesting. So, to start with, we have 1.5 trillion repatriated. Of that 1.5 trillion, you lost 15% in taxes, so you lost 220 billion in taxes. So that leaves you with $1.28 trillion. That's sitting around waiting to be invested. That 1.28 trillion is the future for all young people in America, because that money, instead of being used overseas, is now going to be used here. You see, when it was sitting overseas, you could not use that money as collateral for loans to build new plant and equipment in America. What they would do instead is they were building new plants and equipment overseas. By now coming back, if a company's going to want to grow, they can use that 1.28 trillion as either collateral to borrow, or they can use it to invest in new plant and equipment. So it's not the old plants that we're making. Let's give you an example. Here's a golf shaft, okay? This golf shaft, these used to be made in America all the time. They all got sent over to China. This is True Temper is the name of the company. It's steel and welding supplies, because they welded those shafts. There was a drawn shaft. So there's been tooling that goes with it. What's going to happen is the next plant is going to be made in America, and the next plant, and the next plant. And as they make those plants, because there's not enough laborers like they use overseas, they're going to require what's called AI, artificial intelligence. They're going to require much more material handling robots, things of that nature. Material handling and robots to do production work. But most important is they're going to require supply chains. This is why that repatriation was so important, is supply chain management. Now, and I use my golf shafts again as an example. When these things went overseas, the steel for these golf shafts came from overseas steel companies. Now that, you know, a company may make golf shafts in the United States because it's cheaper for them to have it here, that steel is going to come from American steel companies. So American steel companies, if you think of the supply chain of American Steel Company, which is either scrap, coke, iron ore, anything that goes with it, the trucks that have to move stuff in and out, all the stuff that goes into trucks, the supply chain management means that the actual business that's done here is going to be exponential, which creates what we call a trickle-down theory because of the supply chain. Now, I'm not saying that entire supply chains are going to be manufactured in the United States. And we see that regularly now. You know, there's companies that have, let's say you're making beds, bed frames. All your parts you're buying from overseas, but you're assembling them here or you're selling them here. Well, there may be things that still are going to be purchased overseas, but they're still going to come in here. But more and more of the new production facilities that are based in the United States corporate business are going to be built in the United States because of this repatriated money, because of the 21% tax rate, and because of the fact that they're going to use artificial intelligence, robotics, and material handling equipment for their production methods. So, some of the key jobs in the future are going to be what? Mechanical engineers, right? Now, mechanical engineers, over the last 10 or 12 years, I mean, that job was going downhill and everyone was outsourcing it to India, China, wherever. But, you know, you're going to want someone on hand to do that stuff. So that's going to be a big job. Programmers to work for artificial intelligence. People that run the supply chain management. These are all going to be big time jobs coming forward in the future. So if you're a college student today and you want to sit there and say Trump's an asshole, let me tell you what Trump did for you. Trump created an environment where corporations are going to continually invest in America versus invest in overseas subsidiaries. By continuing to invest in America, they're going to continually invest in, you know, the need to build what they have. They're going to continually invest in the need for supply chain management, which is huge, and they're going to then keep moving the money in America, and the money's going to stay here. And that right there is the key to a long-term financial stability in our economy. Thank you.